Aditya Velekar, Senior Research Analyst, Metals at Axis Securities, joining us this morning. Aditya, very good morning to you. You reckon a sentimental positive definitely this morning, and what is the clear advantage, quantifiable advantage you see for domestic steel companies?
Yeah, good morning. So, from the date of March, means when this DGTR announced this safeguard duty of 12%, when it proposed, so now that is a formal announcement is coming. So that is a relief, but most of that positive was already factored in, and steel mills have taken price hikes just prior to the DGTR announcement itself, and the price hike quantum was in the range of 2,000 to 3,000 rupees per ton for HRC prices. And if you see currently on an import parity basis, the discount to Chinese imported steel, the domestic steel prices the discount is not very significant. It's just 1 or 2% discount. So and this is after even the 12% safeguard duty. So what essentially we need to see is that if the Chinese steel prices comes down further, then this discount will vanish, and the risk of cheaper Chinese imports will still persist despite the 12% safeguard duty. So although it's a sentimentally positive news for today, and the overhang is gone with this formal announcement, so that's a positive. But going forward, if you want to take a medium-term look, then the critical data which comes from China, especially with respect to their steel exports and their domestic steel production, that will be a key monitorable. We will not pay much attention to the data up to March because they might have preemptively they have exported more steel in anticipation of enforcement of tariffs from April. So the data from April will be a key monitorable. If the steel exports continue to remain high and they continue to produce large quantum of steel, then the regional steel prices will continue to remain under pressure, and the domestic steel mills will find it difficult to increase the prices from this level.
Extent, Aditya, of a price decline by Chinese steel producers would be the worst outcome, and what can be absorbed? Can you quantify that?
Yeah, so in terms of absorption, I will comment on that. So if you see the price hikes taken by steel mills since the first announcement by DGTR, so the quantum was, as I just said, it was 2,000 to 3,000 rupees per ton, and that I am getting a feedback from my channel checks that even that price hike is not getting fully absorbed by buyers, and the sellers are struggling to pass on that price. So as I said, means from this level, the price hike looks slightly difficult unless we see increase in Chinese HRC prices. So that is our view. So on the flip side, the positive thing for the steel sector is that the coking coal and iron ore prices have remained soft, and that has conserved the spreads. So that's why the stocks are slightly in a range-bound region, and they have not reacted very negatively. But overall, I think clear demand indications from China or any stimulus from China will be the key trigger, and that will provide a fillip to the domestic steel names.
Aditya, just wondering that would SAIL, by virtue of the highest capacity, so to say, impacted, be the key beneficiary for this move, even as you say that things may cool off a little bit later on?
So this move is beneficial to almost all the steel players. Specifically, if you want to classify, then the flat steel producers, for which this duty is applicable, because long steel production and long steel producers, the duty is not really of any impact, because long steel is a highly regionalized play, which is used in the domestic construction. So the players like Jindal, JSW Steel and Tata Steel will be more benefited because their flat steel contribution over to the overall product mix is higher, and also the sensitivity of steel prices and coking coal prices is very high for players like Steel Authority of India, where the fixed cost is quite high. And with a high fixed cost, any their sensitivity to these coking coal and HRC prices remains very high. So any fluctuations on that will also move their stock price relatively faster. So for SAIL, Tata Steel and JSW more positive. JSPL, Jindal Steel and Power has more proportion of long products, so may not be that beneficial. So that is in general I can say.
Aditya, with this context then, if I were to ask you, not just in steel but also in the broader metal space overall, what would your recommendation or what would you be positive on based on all the information that we've just discussed? Would it be ferrous or would it be non-ferrous, and which would the pick be?
At this point of time, ferrous looks slightly more supported because of this government policy action. And also, as I just described, the lower coking coal prices, which is supporting and conserving their spreads. So ferrous is our pick amongst the metal pack. In the non-ferrous, the issue is basically both LME, aluminium and zinc. The prices have come under pressure since the 2nd of April reciprocal tariff announcement. And in the medium term, because of these reciprocal tariffs and the trade negotiations, the question mark on the demand, industrial metals demand, is emerging. So at this point of time, steel being a localized commodity and given India's domestic steel production and consumption, especially domestic consumption growth is quite strong, which we have seen in last couple of years. It's growing in double digits. So that is supportive for steel players. Non-ferrous metals, it's non-ferrous, as you know, it's traded on London Metal Exchange, and we are the price takers. So a lot of pain is there and uncertainty is there. Although the thermal coal prices for these aluminium smelters, that has remained quite soft and is conserving the spreads for non-ferrous metals. But the LME aluminium prices have declined from the peak, and the medium-term prospects are slightly uncertain. So that's why we prefer steel over non-ferrous at this point of time.
Okay. Point well made on ferrous versus non-ferrous, but then within that pack, within steel makers then, which would you prefer? What would your top pick be?
Our top pick will be Tata Steel, followed by SAIL, and then JSW Steel and JSPL in that order. And in non-ferrous, most of these companies, they are going for a big expansion. So it's a function of LME aluminium prices. So in terms of the expansion capabilities and execution capabilities, Hindalco screens first, followed by Vedanta and then Nalco.
All right, thank you so much, Aditya, for all of those views. And I think it's important to note that we'll have to wait and see what the April uptake is before we know that this is beneficial